Despite the crypto collapse we've seen over the past couple of months of FTX, crypto hedge funds, and more, there is a regulated space in the financial industry that is seeking to make legitimate transactions, over $10 billion worth of transactions, and over 50 financial institutions involved with the Provenance Blockchain Foundation. We have the CEO, Morgan McKenney. Thanks so much for joining us.
Thanks, Christine. Delighted to see you.
All right, so this is really fascinating. So despite all the implosions we've seen in crypto, there is a regulated force to try to make blockchains more acceptable and regulator friendly. Tell me a bit about Provenance Blockchain.
Absolutely, and Provenance Blockchain is a public chain as part of the Cosmos ecosystem, focused on enabling institutions to do their financial services better. So for instance, issuing real-world financial assets on chain, like mortgages, home equity lines of credit. Apollo's put digital funds, they're a large $600 billion asset manager. They've issued natively on Provenance LP interest on Provenance. And so we're focused basically on re-architecting the financial infrastructure layer. The innovation in financial services over the last decade has really been in the customer app layer, meaning what you see on your phone and what you can do. Mm-hmm. That's all provided by fintechs. They ride on bank rails, they ride on legacy infrastructure. And for the first time, digital assets, digital money, digital security, digital identity, and networks and chains have evolved enough so that we can change fundamentally how financial services is done, delivering significant value to businesses and consumers that rely on credit, wealth building, savings.
So there are over 50 financial institutions involved in this.
Yep.
Over $10 billion worth of transactions. So who's involved and what are they?
Absolutely. So for instance, Figure, which is a fintech built to basically harness the power of blockchain, is issuing hundreds of millions of home equity lines of credit on Provenance monthly. And what that means is if you issue the HELOC on chain, a customer can take a 5-minute application and get money in their bank account in a few days instead of 30 days or going into a bank, as an example. Mortgages that used to take 45 days can be done in 5 days at 120 basis points cheaper. That means the consumer gets a cheaper interest rate. The mortgage originator makes more money. So you strip out a lot of the inefficiencies of traditional financial services that has a lot of intermediation, a lot of reconciliation. With a shared ledger, a shared status of record, you basically can create the new digital factory of finance by natively issuing all these financial assets on chain and then doing the servicing, financing, trading, and securitization much more efficiently.
And so you're essentially eliminating ACH.
Absolutely. Well,
and replacing it with?
Yes, with digital money natively born on chain issued by banks. So we have something called USDF, which is bank minted tokenized deposits. Members, and we have 9 members of USDF today, for instance, New York Community Bank as an example. If their customer wants to send money to another customer of a USDF bank, that can be issued natively digitally on chain, on Provenance, reflecting money in the bank account. So it's already in your wallet, right? If you have an account with New York Community Bank as an example. And we're applying for regulatory permission on that front, and we believe that this private and permission zone of Provenance can help really enable banks to participate in this new digital economy. Given they're highly regulated, they have FDIC insurance, they have fractional reserves.
So if I'm a bank, I'm taking dollars.
Yes.
I'm minting USDF.
Yes.
And with the USDF banks, I'm transferring it in between each other. So
exactly.
what am I doing with the dollars that I'm holding?
The dollars get settled, periodically, for instance, throughout the day, as an example. But what it allows you to do is pay a merchant instantly, as an example. They don't have to wait 2 days to get their credit card funds, as an example.
Do you think eventually we'll just eliminate or not need dollars?
No, we need digital dollars.
Okay,
and digital
well that's what I mean,
like
we don't need the paper dollars that are...
Well, exactly, yes. A lot of the financial fiat, right, so currency, US dollars for example, is digitally in a bank account, but it doesn't live on chain. And if it lives on chain, it can be actually programmed. Capital calls can be programmed, loan payments, interest payments, all of that. If you have the financial asset on chain and you have the digital money on chain, you can really automate a lot more financial services than we can today.
Now you have spent about 20 years at Citibank, you've worked at the NASDAQ, you've been in traditional finance. How receptive are banks to this idea?
Yes, so I partnered with NASDAQ when I was at Citi, but long-time Citi career around the globe. And This is not going away. Blockchain is a really transformational technology. By having a shared ledger of status, as opposed to everybody keeping their own version of the truth and then having to reconcile it. Banks all have large digital asset teams. We've seen Bank of New York Mellon, in the custody business. That's one of their core businesses. We've seen Fidelity in blockchain space. And it's an enduring trend that will transform, so they have to focus on how to harness this technology successfully to strengthen their business, enhance their competitive advantage. And we're working with a lot of non-bank financial institutions as well, like Apollo, Hamilton Lane, Neuberger Berman, large asset managers, Figure, and examples in the distressed asset space, in infrastructure lending. And so we're working with the Coalition of the Willing today, and because that's important, because this is hard work. But we have these franchise leaders that 2022 was about true institutional adoption in core business use cases, right? No more POCs, et cetera. I think 2023 will really be about continuing placement of real-world assets, real-world financial assets on chain. There's structured products, there's corporate bonds, there's commercial real estate. There are, financial services is about 20% of the world's economy. So,
we're at the World Economic Forum. So what
absolutely.
are some of your goals here, and what's been the reception like from regulators and policymakers?
Absolutely, and I'm an ambassador at GBBC, Global Blockchain Business Council. It was established here in Davos 6 years ago. It's the largest blockchain industry association focused on bringing regulators, economists, traditional finance, and across industries to harness the power of blockchain technology, help set standards, help really promote adoption through all the basic building blocks. And so our goals here are to continue to collaborate to get use cases successfully on chain, delivering real monetary impact. The theme of Davos here at WEF is cooperation in a fragmented world. Blockchain is a technology that enables that.
But we've had this crypto winter, we've had this collapse of FTX hedge funds and other crypto companies. Do you find that there has been a chilling effect, that they're a little more skeptical or critical of approaching crypto?
Crypto needs a new narrative in the sense that the big focus has been on crypto trading and lending in unsustainable business models. We're focused on the longer term, more sustainable trend, the trend of using blockchain to natively issue financial assets on chain to enable all these things to happen more efficiently, provide greater access, lower the cost to serve, enable open innovation. All of these things are the more sustainable chapter and enduring chapter. So we're working on that.
Do you think the financial system will eventually embrace DeFi?
I think my personal perspective is financial services is really important for the economy, obviously, and for wealth creation savings. It needs to be in a regulated context. So we need thoughtful regulation in the space. That includes around stablecoin. Digital money is really important, right? Mm-hmm. So enabling banks to mint tokenized deposits, for example, we think is really important. So thoughtful regulation, consumer protection, segregation of duties, all these core financial principles are important to apply in a decentralized financial system. So we absolutely need thoughtful regulation.
All right. Thank you so much, Morgan. Appreciate your insights.
Thanks, Christine.
All right. That was Provenance Blockchain Foundation CEO, Morgan McKenney.